let's put you to the test a little bit here. Let's give like a hypothetical scenario here.
There's going to be a test.
Yeah. I know that's a little pop quiz action here. But let's say imagine you have a client. Let's say they recently sold a very successful tech startup. That's a hot thing going on right now. And let's say they have a liquid net worth now of around $8 million. But they have concerns maybe about wealth preservation and growth, and they're seeking some strategies to maintain their lifestyle while also minimizing the risk and maybe potentially capitalizing on some investment opportunities. I don't know how you balance all that. That seems like a lot of requests.
You're really making a complicated puzzle here, huh?
Yeah, I'm trying to work this out. I'm trying to give you something tough here. But how would you approach a scenario like that where somebody's got that much money and they want to minimize the risk, but they also still want to find a way to invest and set themselves up for the future?
Well, we're really in what I would say, not even interesting times. I'm going to call them normal. I think the world is becoming in many ways normal. And what I mean by that is for the last 10 years, earning 0% in a fixed, any kind of a fixed instrument was the world we were in. And we're in a position now where someone who's making that large sale of a business, they can generate cash flow in ways that they couldn't have with different levels of risk than they would have had to have taken over the last 10 years. And this is all a function or because of the Federal Reserve having raised rates over the last year so much, we now have things that are actually paying us interest and giving us dividend income that's more substantial and to a certain degree, depending on what we're comparing it to, carries a far lower amount of risk. And back to those puzzle pieces, the tax level that someone is in, some of those from a net of tax comparison point, there are tax-free income instruments as well. Those are going to provide income to you. And when we factor out that you're not paying income taxes or little income tax on that, that's a very competitive yield or income stream comparable to, say, the riskier assets that we'll call stocks or just in the stock market. So we have a lot of unique, or I wouldn't say unique. Like I said, I think that's more normal. We just haven't had that opportunity since 2009 when rates went to zero. We haven't really had this opportunity. So now the toolbox is full of the tools that are really much more helpful to that kind of a person who's going through that sort of a life event and will benefit and have the opportunity to take advantage of so much more in the current situation that we find ourselves today. So if you like what you heard today and any of our discussion resonates with you, we always say here at Good Financial Services, it all starts with a conversation. So just write in the comments below or go to our website, goodfinancial.com, and just check off that you'd like to set up a conversation. And we're happy to just chat and see where your situation is. And I'm sure we can provide advice and help along the way.